All right, traders, George here, and before the week gets too far along, I want to go over the S&P here and give you some new trade strategies for these levels we're trading at. Also make mention that got a lot to talk about for gold and oil. I'm not doing videos on them tonight. We're going to cover that in the live room tomorrow. So if you haven't been there, use the link at the bottom of the page and you can get in there and check out all of that live, as well as some day trading in those markets and more. But for right now, what I want to talk about is the S&P futures. Since the end of the year, we've been trading into the 2000s, well into the 2000s. We've had a couple of punches below the key round number of 2000s that have all been recovered. There's a lot of trading commitment at this area north of 2000, which is pretty impressive. And it can work both ways. One is that it's very supportive to moves up. If we can really start trading above this area here, it would be very impressive to have this much trading commitment below price. That would be extremely bullish, to put it mildly. You've heard me say that many times before on this incredible bull run, and this is no exception. However, when you have a lot of trading commitment towards the top and you start trading below, that makes all of these breaks here actually pretty dire, and it's really the bear's fault for not doing more with it than that, and also showing that there's a lot of bull strength here with these buying opportunities to help push price up. So where we are right now is we're at 44s. This last key impulse here broke above 55s. That's a key threshold of commitment here, and we sold off a little bit and had a very stagnant tight session today for the most part. Closed a bit in the red, but we're relatively contracted here in the 40s, and finding support actually just on the top of the most heavily traded area here for the last 120 days. So that's pretty bullish. If we don't make any new lows from what we made today, Monday, there's actually a great one-to-one harmonic to bring us up to about 2126 to 2130. I've got a 4-point range up there. Of course, en route, 2067s and 2079. Getting over about 2075, there's not much trading commitment above that at all. So anything over 67 starts that process, and we could see a very sharp move up. The danger would be if we start to move up and we don't do much in terms of impulse energy as we arrive at about 2080. That could actually create this impulse and break it into a 3 drives to a top, which could see us pulling back. So the scenarios I'm looking for would be bullish, and then looking for trend continuation strength over 55, pretty much a lock to go to 67 at that point, and then look to see for extended 79s. This big one-to-one up here, and then I've got an extended target at 2141. There's a lot of math and ratios that drive these targets up here where we've never been before. To the bear side, what I've got listed here in black, that's the floor of this commitment zone here at 2030, and really it's going to take us another 15 points just to test that area out, and there's not a lot of room to run below it before we go into another beam. But trading below 2030 would be a negative. It would be letting go of this area here, and you'd look for about 2019 to the top line there for your first area of importance there, which could create some short covering or some bottom feeding. And if the bears really want to step on it, anything that's accelerating through 2019 will very likely go to 2004. It's so close to the round number of 2000, but it is a little bit higher than the round number of 2000, so I wanted to make that note there, 2004. And really getting below 2004, a little extra there for 2000. These are the 3 most important price points below 1994, 1985, and 1970. The name of the game here is this very heavily traded area. Obviously, we can get some pretty good sized moves throughout them. These will be key upside targets regardless of whether we go up and hit them cleanly or we come back down and then work our way back up, because they're literally built off of all of the prior moves that we've made. So anything getting below the round number of 2000 would be the big black eye to the market, and so far it's really relished the opportunity to buy up the lows anytime it's broken below that. We'll see if that changes or not, but for the time being I'm looking for a bull continuation. For you DSR traders, you can take these price points and look to see how your DSR models handle them intraday. And if you're position trading, you really need to see price move up a little bit more than where it is. The most aggressive would be looking to get over this threshold here at about 2046s. So that's basically contained price for most of the afternoon here. These are the key price points. They will dictate where all the key catalytic moves come in, where all the turning points come in, and we'll be on top of this in the live room. We'll see you there starting tomorrow.